What's going on? Alex here, and today I'm answering your tax questions from Reddit. And today's question has to do with whether you can minimize your taxes if you register your business in a different state. Let's take a look. Now, this question comes from Pursuing Materialism, and it reads as follows. Would like to start an LLC question around location. I'm interested in starting an LLC, but live in California where the startup cost would be $900+. Parents currently live in Indiana. Is there any way I could register my LLC in Indiana, or is this generally a bad idea? A bit off topic, assuming I don't register in Indiana, would my best approach be to start as a sole proprietor in CA and then shift to the LLC once I have revenue? Interesting question. And I can't tell you how many times I'm asked this question. Clients always believe that they are the first ones to think of something like this and that they're going to completely pull a fast one on California in this case because California has high business taxes. So, firstly, let's discuss what having an LLC in California means. California, being wonderful as it is, has an annual tax for LLCs of $800. That means that if you did business with an LLC, whether you made $1 or $1,000, you're going to pay $800 just for the privilege of having a limited liability entity throughout the year. On top of that, there's also the annual LLC fee, which starts at an additional $900 and can go up from there depending on the gross receipts of the business. So if you have gross receipts with the LLC of, let's say, $300,000, you have the privilege of paying $800 plus $900 on top of it. You have the tax and the fee all applicable in 1 year. You could be paying $3,000 to $4,000 to California every single year just for the privilege of operating the LLC in the state. So a common misconception that I hear all the time is clients say, hey, I'm going to register my LLC in Nevada or Florida or Texas or pick your state with no income tax, and that's going to allow me to avoid taxation in California for my LLC, they believe. The problem is that that is incorrect, that you're not going to get ahead of this thing by registering your business in a different state, because the deciding factor on whether the tax is applicable is whether the entity is doing business in California, no matter where it's registered. So even if it's a foreign LLC, foreign meaning outside the state of California, so in any of the other states, if it's registered in any other state, it's a foreign LLC, it's still going to be subject to the $800 annual tax and $900 minimum fee if the gross receipts reach certain levels, and so on and so forth. So you may very well register that LLC in Florida. If you're doing business in California, welcome to those taxes, all right? So in many ways, it's the same as if you would have registered the LLC in California. But what happens is when you register in a different state, now that state may have its own filing requirements on an annual basis. You need to pay a fee maybe and submit some kind of report, statement, and you're handling that for the other state. Now, in California, when you start doing business here, you need to register it as a foreign LLC. So there's, of course, fees and papers that need to be filed for that. Plus, on an annual basis, you need to make sure you file the proper tax return for the LLC itself, okay? So you might be filing Form 568 or what have you. And that is a situation that is going to be applicable if you try to skirt the California taxes. This is not the first time people have thought of this. People think of this all the time. But the states are privy to this, and they're going to tax you on where the income is earned. Meaning that if you're doing business, if you're managing the entity from California, another way to look at it is if it's an LLC that's earning money because you're earning the money being inside of the state of California, then you're going to be subject to those same taxes. So you may save yourself on paperwork and filing fees if you just go ahead and file the entity in California, bite the bullet, pay the taxes, and just deal with it. Because I can tell you that California and New York, I believe, are in a competition to see which state is most vicious in terms of tax collection. And California is no slouch in this regard, all right? They will find you, and they'll make your life not so happy. So definitely want to make sure that you don't fall under this misconception that you can magically avoid California taxes by registering out of state and all this other nonsense. And I've even read some websites that allude to this, but it's a misconception. Now, with that said, from a legal perspective, this is outside of the tax side. From a legal perspective, it may make a difference where you register your entity. Different states have different protections for entities depending on the laws of that particular state. Now, you have to discuss that with an attorney. I'm not an attorney. I can't provide legal advice. But my understanding is that Delaware, for example, has some friendly provisions towards some businesses, and a lot of businesses are registered in Delaware. Does that make sense for your particular business? Again, you have to discuss the legal side with an attorney, see if there's pros and cons that are applicable to you. Then you sort out the tax issues and see what's most advantageous there. But you don't want to confuse the legal and the tax aspects by allowing the tax tail to wag the dog, if you will. So for me, if I'm registering an entity, first I want to know about the legal protections, and if it makes sense for me to register in Delaware and do business in California, so be it. But I'd need to register that Delaware entity as a foreign LLC in California and pay the applicable taxes if I'm doing business. That's just the name of the game. And let's see if we can address some of these other questions. Now, parents currently live in Indiana. Is there any way I can register my LLC in Indiana, or is this generally a bad idea? I think I covered that pretty substantially. A bit off topic, assuming I shouldn't register in Indiana, what's the best approach to start as a sole proprietor in California and shift to LLC once I have revenue? Essentially, you can either start as a sole proprietor and then you can put in place the LLC when you have some traction. That's certainly an idea. But again, you have to take into account that you're going to be operating a business without that limited liability protection that may exist. Again, an attorney would be able to advise you on that, but it's up to you. If you don't feel that there are significant risks after consulting with an attorney, then you may consider operating your business without the LLC first and then getting the LLC once you have some traction. The other approach would be to have an LLC from day one. And again, there's the legal side that you need to consider, consult with an attorney, and the tax side that you need to take into account because it is expensive to start a business in California. All right, so hopefully pursuing materialism. You're also a fan of pursuing knowledge, and that is the idea of these videos. If you found this helpful, feel free to hit that like button, subscribe to the channel, hit that bell icon to be notified of future videos because there will be many. Leave a comment. Let me know what you like, didn't like, your thoughts on California and all of its crazy taxes. And as always, hopefully this was helpful. Thanks for watching.